Hi, I'm Dan Wilton, the CEO of First Mining Gold, and thanks for joining us for this corporate update. It's been a really exciting and busy start to 2021 here at First Mining as we finished particularly our updated pre-feasibility study on the Springpole project, declaring reserves for the first time, which is always a big milestone in a project's development. So very excited, lots to bring you up to speed on here. I'm going to be making a few forward-looking statements as we go forward. And first and foremost amongst those, at our Springpole project, we completed our pre-feasibility study and announced those results in January. And I think it demonstrated what we always believed, is that this is one of the biggest and most robust gold development projects in Canada, if not in the world. One of very few projects that can produce in excess of 300,000 ounces a year and very robust economic profile. We'll talk about that in a minute, and some of the important changes to the scope that we put forward in this pre-feasibility study. Also continued to strengthen our balance sheet. We're sitting with in excess of $40 million of cash on the balance sheet as a result of some of the financing efforts we made last year, particularly with our silver stream with First Majestic. The second stage of that financing has now come into the company. And important, thirdly, we've made some really important hires on our team, including adding Steve Lines as our VP Environment and Community Relations. And Steve and his team have joined us from Greenstone Gold Mines, where they spent the last 6.5 years permitting the 5 million ounce plus Hard Rock project in Ontario. Really one of the most comparable projects to Springpole. So we're delighted to have Steve and his team on board and really focused on getting our environmental assessment documents pulled together and ultimately submitted by the end of the year. Still, I think we're trading at exceptional value relative to our peers and have lots of room to see our share price continue to increase. We'll talk about that. And with our portfolio of assets, between our ownership of Pickle Crow, our ownership of Ateco Minerals, our partner at Pickle Crow, our ownership of Treasury Metals, and the other assets in the portfolio, I think we continue to have exceptional leverage to an increasing, what we think is going to soon be a re-increasing gold price. I think this pullback presents an excellent opportunity for investors to be getting into First Mining at what we think are really attractive prices. Sitting today with in excess of $40 million of cash. If you look at cash in our marketable securities on our balance sheet, it's in excess of $50 million. Really well funded to see our Springpole project all the way through to the completion of the environmental assessment process. So we're very excited about that. And on top of that, I think still showing our strategic investments, Treasury Metals and in Ateco and Pickle Crow, meaningful contributors to our market cap. And I think that leaves us with Springpole being fundamentally still a major source of value for this company. Trading at a big discount to our peers. That discount has persisted in spite of the share price having come up from where it was last year. But I think we've demonstrated on the fundamentals with Springpole that this really is a key strategic asset for the industry. And here we demonstrate a little bit about how we think that under that valuation can play catch up over the course of the next few years here as we continue to de-risk the project. This just gives a bit of a sense of what we think the fundamental value of Springpole is based on our pre-feasibility study having come out. And then if we start trading up at values close to where our peers are trading, where we think our share price would move on that basis. So as you can see here, really clear runway based on, not on exploration success, which we think we're going to have at Springpole, but really based on the fundamental value in this project that already exists. We think we've got a great runway just on Springpole, not to mention all the rest of the projects, to continue to see real value accretion in our share price. We'll talk a little bit about the results at Springpole. This, as we said before, really important milestone for the company, declaring reserves. Our 4.6 million ounces of gold resource converted to 3.8 million ounces of reserves, and I think that's a very important metric for people to be focused on. We think there's still good resource development potential at depth, and we think with some increased geotechnical work, we're going to be able to bring some of those resource ounces back into a mine plan. And on top of that, at Springpole, one of the things that we're really starting to focus on is the regional exploration potential, which we really haven't had the opportunity at First Mining Gold to spend the time and capital on that we needed to better understand it. But with our balance sheet in a healthy situation like it is, we're now starting to turn our attention regionally to where we see what is fundamentally a really underexplored greenstone belt. So we'll talk a bit more about that as we go forward. But on the base case with this PFS, Springpole shows very, very robust after-tax NPV at a $1,600 gold price of $995 million US and an after-tax IRR of 29%. This is what we think one of the most robust projects in the industry. In a Tier 1 mining jurisdiction, Ontario has been one of the best jurisdictions to permit mining projects over the last 5 years. And again, a really unique strategic asset in Springpole in that it's really one of very few projects in Canada, in North America, capable of being developed and producing 300,000 ounces plus a year. So we'll have a look at the project a little bit. Obviously, we're very familiar with the evolution of it, but some really important changes that came about in our pre-feasibility study. Particularly, one of them was scoping the project, removing what we had, which was a conventional tailings dam. As you can see, the project sits around a lot of water. And importantly for us, we had heard from a number of our communities that a real concern was what happens if there's ever some catastrophic failure of a tailings dam. Well, our solution to that problem was we wanted to understand if we could scope the project without a tailings dam. And we have. We scoped this project with filtered and dry stack co-located tails. So that's this dry stack co-disposal facility that we have here. And I think that had some interesting implications for us. It's quite a big element of our capital cost up front, but it also helped us reduce the overall capital, life of mine capital for the project significantly, dropped our sustaining capital significantly. Because this co-disposal facility is built up over time a bit like a leach pad. So it means you don't have large increases in sustaining capital for tailings dam lifts going forward. So we think it's a really robust environmental opportunity that we're going to continue to explore as we go forward. On top of that, it really also allowed us to shrink the footprint. So we used to have a second mine waste rock facility in behind the plant. That's now where you see the ore stockpile here. And that is, I think, another interesting element of the project that we have been able to continue to shrink the footprint. But importantly, and a lot of people don't appreciate, this pit in Springpole is about 1.5 kilometers long. It's a really concentrated ore body, and I think that's one of the things that has really led to the robust economics. You have very short hauls coming out of the pit to the plant, short hauls coming out of the pit to the waste rock facility. And I think we're looking at opportunities over the course of this next year to see how we can really continue to demonstrate and even improve the robustness of the project. So lots of work ongoing. But importantly, I think the deposit itself, as we've always said, really came through in demonstrating and helping contribute to the robustness of this PFS. Just a reminder, you can see here it's a continuously mineralized, intrusive ore body. And importantly, you can see on the page here, there are areas of quite a bit higher grade in this deposit. So the blue blocks here are between the cutoff at 0.3 and 1 gram. But even looking at the orange and red blocks, 1 to 2 gram and greater than 2 gram, there is very good grade interspersed throughout this mine plan. And one of the interesting opportunities that we had going through this PFS was to take, with this mine plan, an opportunity to bring some of the higher grade in the deposit forward. So that has really important impacts on reducing the payback period, which in the after-tax payback period in the PFS is 2.4 years. That's down from almost 4 years in our PEA. And it just really further goes to demonstrate the robustness of the deposit. So on top of that, there are still, as I said, good resource growth opportunities in the project. This is, you can see there's actually some inferred material, about 8 million tons of inferred material in the pit that's not in the PFS, because you can't include inferred material in your pre-feasibility studies. But this is 8 million tons that we think with a little bit of drilling we can convert. And on top of that, you can see at the bottom of the pits, there's still a lot of resource which hasn't made it into the mine plan, largely due to some constraints we put on laybacks and on strip ratios. But ultimately, I think this is more resource upside that we can continue to bring into the project. As you can see here, it's really well drilled. It's one of the things that allowed us to have such good conversion of our resources to reserves in this PFS. So ultimately, we're very excited about this project and the PFS and the plan that we put forward, but there's still some really important work for us to do going forward this year. So we're not driving into feasibility study this year, but we're doing a bunch of optimization work around the filtered tails, around further electrification of the mine. How can we further reduce our diesel usage and reduce our greenhouse gas emissions from the project? Looking at potential increases in recovery, which we think there are some real opportunities in further metallurgical investigation for us to increase the recoveries. All of those are going to fall directly into the bottom line of the project and further enhance what we think is really one of the most robust projects of its size in the world. So very exciting path forward here. Busy year this year. We've already got 10 metallurgical holes drilled and moving forward on some geotechnical holes. And after we finish that, which is some of the optimization data collection, we're moving on to a really exciting part of the story, which is, for the first time in years, really testing some of the exploration potential at Spring Pole. So we're very excited about that. But just make sure that we've kind of wrapped it up here. You can see here a lot of the results of this PFS. And when you look at the average annual production, you look at the all-in sustaining costs in the lowest quartile, it's really not that complicated. You have a big project with a low strip ratio and good grade that we have an ability to move some of that grade up front through some very clever mine planning. And it shows a very, very robust project with an attractive payback period. And importantly, real leverage to gold price increases. And I think for those of us who think that the gold price is going to continue to rise, get back to levels where it was in 2020 and above, our project has exceptional leverage to the gold price from what's there. Not to mention some of the leverage we're going to have from exploration success around the project that we're starting to focus on. And importantly, as we've moved through the development of the project and having augmented our team, it's become really clear to us we faced the questions about the cofferdams and the dewatering over time. And one of the benefits of having Steve Lines having joined our team, Steve in his background has been involved in permitting projects with similar footprints, with cofferdams and dewatering. So Steve, as a proponent, permitted the Gacho Quay project with De Beers in the Northwest Territories. And Steve, as a regulator, helped permit the Meadowbank project in Nunavut with Agnico Eagle. And you can see here the disturbance, the relative size of the disturbance. Not only has this been done in Canada, but it's been done now, as Steve says, he's done it twice. So we think that the amount of engineering that's gone into the plan and the team that we've had working on this plan, importantly, from Ausenco and AGP, who are involved in scoping and building a number of gold plants around the world and in Canada right now, having brought Wood Engineering on with in a greater role on the permitting. Wood's been involved in permitting almost every large gold project in Ontario in the last 20 years. And importantly, on the cofferdams, we had those engineered and costed by a group called Bauer, that their specialty is building dams. So when you look at the team that we've really brought to bear on this project, I don't think it gets enough attention, because this really is a first-class team that's come together to help scope out what we think is one of the most robust projects in the industry. And importantly, why is this strategic? And I think this slide really tells it all. There are very few projects developable in Tier 1 jurisdictions that can produce ounces like this project is going to produce, peaking out around 400,000 ounces in year 3. but this is a big and robust project that I think is going to continue to convince people as we move it forward through the environmental assessment process that it's really a unique opportunity in the industry. And here, again, why does it matter? It matters because this just kind of helps frame there is a really limited number of projects in this size and scope in permitting processes in Tier 1 jurisdictions. And so we think that Springpole really is, as we continue to move it forward, is going to continue to surface that value for our shareholders. And importantly, as we talked about before, starting to spend more time and attention on the regional exploration potential at Springpole. So we've got 4 or 5 targets right now on the Springpole property that we have scoped for drill testing this year, which we're very excited to do. It's the first time we've been drill testing regional targets at Springpole since First Mining's owned it, and really some of the first real drill testing that's happened on any of these targets in the last 15 years. We've been so focused on developing the main part of the Springpole deposit that we haven't really had the time, attention, or capital to go out and understand the regional perspective. And I think that's something that's really important and coming together. We've also just announced last week that we've picked up about another 5,000 hectares of really prospective ground in this Birch-Uchi Greenstone Belt. And so we're very excited to start doing really some regional compilation and see how longer term some exploration success might add value to Springpole. But excited to get going on that. We're sitting as the anchor tenant in what is a fundamentally underexplored greenstone belt in a Tier 1 jurisdiction. So we're very excited to get moving on that. Our game plan this year at Springpole primarily is submitting an environmental assessment document by the end of the year. We're working in consultation with our communities right now, and ultimately I think it's really important that we are working with our communities to scope the project that everyone is comfortable with. So that's part of these trade-off studies right now. We're very clear in saying the pre-feasibility study is not the answer, but it provides us with a real kind of benchmark and a case study where we can then understand what the real concerns are and how we can design mitigation of some of those concerns into the project that we want to get submitted into the EA process formally at the end of this year. And then from there in Ontario, it's been a pretty reliable 18 to 24 months. And that leaves us with permitting timeframes, coming up towards the end of 2023. And in the meantime, this continued de-risking and optimization work this year, which then we basically will move towards submitting starting our feasibility study really at the end of this year, beginning of next year, once we know what the project scope that's going to be submitted into the EA is going to look like. And that we have lots of time, I think, as we go through that EA process to complete feasibility and ultimately be in a position where, with our environmental assessment approvals in hand, we're talking about how we move the project forward at that point in 2023. So, and the important thing from our standpoint is we've made some really critical additions to the team to be able to get there, and we've made obviously some pretty dramatic changes to First Mining and our portfolio to give us the financial flexibility that we are well funded with our cash and with our strategic investments to be able to get to the starting line, as we like to say. So we're very excited about that. And just to echo the value of the team and importance of the team that we brought on the permitting side, between our team at First Mining and the team at Wood, who have worked on a number of environmental assessments. You can see almost every large mine environmental assessment in Ontario since Detour. It goes a long way back, but certainly in the last 15 years, we really have the team that has done the most work of anyone in this area. So we're very excited to be moving forward with a team that we really feel has the capability and skills to get us to the finish line. So in summary, it's been a really busy start to the year already at First Mining Gold with our Springpole PFS demonstrating that's really a critical strategic asset. But on top of that, lots more exciting catalysts to come, including work at Treasury Metals with a big drill program going on at Gold Run and Goliath as they move that project through to pre-feasibility study, including a 45,000 meter drill program in progress at Pickle Crow, and our partners at Ateco likely to hit their stage 1 earn-in here shortly. We'll become a much bigger Ateco shareholder at that point. And then we're looking forward to getting on the ground and doing some exploration work at Cameron, really for the first time testing this integrated land package. So with all of those things, lots of news coming out over the course of the next year. We'd be very happy if you continue to follow us on www.firstmininggold.com, or if you want to reach out to us, please feel free at info@firstmininggold.com. And looking forward to a very exciting next few months here at First Mining. Thanks for joining us.